Welcome to the Independent Advisors Podcast, where we dive into the world of stocks, tradable markets, and financial planning with JWM Wealth Management's Chief Investment Officer, Mark McEvely, and CEO, Matt Jessup. You'll hear tips, tricks, and strategies to address your financial well-being, and most importantly, conveyed in a way that everyone can understand. Here are your hosts, Mark and Matt.
Welcome to episode 325 of the Independent Advisors Podcast. On today's show, we're doing something a little different. So if you've been listening to us for a while now, you know our mission is to educate and empower you to make better financial decisions. But today we want to take you behind the scenes to show you how we actually work with clients, what makes us different, and why we take so much pride in being a fiduciary, fee-only wealth management firm. So if you've ever thought, hey, I like how these guys think, I wonder what it would be like to be a client, this episode is for you. So throwing it right over to you, Matt, do you want to just take a little bit of time and talk about who we are as a firm?
Yeah, I'm excited to do this episode because we get this question a lot. You know, on the podcast currently, we promote a 15-minute phone conversation with me as the CEO of the firm to talk to prospective clients and introduce them to the firm. And so here's where I'd like to start this conversation. JWM Wealth Management is a fiduciary fee-only registered investment advisor. We have a direct registration with our regulatory body, which is the Securities and Exchange Commission. Being a fiduciary fee-only RIA, that means that we don't sell products or earn commissions. Our only job is to do what's in the best interest of our clients, period. Every decision we make, every piece of advice we give is built on that fiduciary standard, right? Now, one thing that's kind of great is when you look at the combined experience here of the firm, you know, just on the client-facing wealth advisors, Mark, we're over 50 years of industry experience. And here's the kicker. I'm the oldest team member at 43 years of age. And it's really unique because I think the firm's really getting to its sweet spot of we have a lot of longevity left in, I would say, all of our careers, where our average age of competition is a couple decades older than us. So our team also has 2 CFPs, Mark. For those that don't understand that, that's the Certified Financial Planner certification. They're client-facing advisors. We have our own in-house research and trading team. That's also very unique about the firm. Nick Whitaker, our director of research, and then we have Ben Mattiel, which handles all of our day-to-day trading that you, as the chief investment officer, dictate. And we have an amazing set of support staff who generally care about helping families, retirees, and business owners make sense of their financial lives. You know, Mark, we pride ourselves on being approachable, transparent, relationship-focused, not transactional. So, you know, when you kind of look at the landscape right now, I know we'll get into this a little bit deeper, but I think between how the firm manages money, our client-facing advisor-to-client ratio, the planning part of the practice that we really bulked up over the last decade, I think we have an extremely compelling offering for prospective clients.
Yeah, no, it's a great point. And, you know, we have over the past several years, you know, when I joined you, you know, this was 10 years ago now, which is quite crazy to think about that's coming out of my mouth. But there really wasn't a investment minimum. Now we do have a minimum. And, and the sole reason for that is to continue to provide the elevated level of client experience that they have grown to expect over time.
It's well said.
And if we just take in anybody and everybody, you know, obviously advisor capacity is going to be strung a little bit, and we don't ever want it to be a situation where clients feel like they're forgotten about or not being taken care of. So a lot of firms in our industries have a minimum, but at least for our firm, that's the sole reason why, is we never want to water down that service that clients have come to expect from us.
So let's put some math behind it, because I think it's a great point. Right now, we approximately manage money for about 425 households. We have what I like to call 5 client-facing advisors. And when you obviously run that math, that is less than 100-to-1 advisor ratio. For some listeners right now, they might be thinking, my gosh, that's a large number. When I left a wirehouse environment in 2009, it was normal to have 400 plus households per client-facing advisor. And so when we are talking to prospective clients, and once they get some education on some of these topics, including that ratio, they really capture really quick the service and attention to detail that we are able to provide to clients. It's truly a very unique experience, I feel, that we offer.
Yeah. So kind of just stepping back briefly, do you want to just take a minute or two and talk about your reasoning for why you started Jessup Wealth Management and kind of your background going back to the wirehouse days?
I think that's a great question, Mark. So I started in the industry in '99, very blessed to work my way up to have the ability to start growing my client base. And as I was going through the great financial crisis, we would nickname that here on the podcast pretty commonly the GFC, which was '07 is when it began. And normally we would say '07 to '09. It was an environment where I was concerned about the viability of the firm itself. Because what happens is at that time, a lot of these larger brokerage firms had an investment banking arm. And just like a lot of people, they made some unwise investment decisions, and it put the actual sustainability of the firm itself at risk. During the GFC, I would be the first one in the office, and I knew if the terminal turned on at like 6:30 in the morning that we were going to be open that week. The most stressful times during the GFC was Monday mornings. And so I already had enough challenges to deal with for the markets and advising clients that I had at that time, let alone worrying about the viability of the firm itself that I was clearing through.
And UBS was not a small firm.
Yeah, it was not a small firm, and it wasn't just them at the time, right? I mean, you had Merrill Lynch sell to Bank of America for $3 a share, right? Bear Stearns, was fire sold for a couple dollars to J.P. Morgan. You had Lehman Brothers go under. So it's not a knock on and even, any of those firms, including UBS where I worked. It's just, it wasn't a business model with the way the firm was set up that I was just comfortable taking that additional risk, right? And I think in addition, what happens with a lot of firms, whether they're regionals, wirehouses, go down the list, a lot of these firms have their own proprietary products that they try to push to their advisors. And I was taking the approach at that time of trying to be as objective as I could to put investments inside my client portfolios that I felt that were in their best interest, whether that was securities I was selecting on my own or third-party money managers at the time. And when you kind of have that conflicting goal of the firm wanting to push, certain products, it presented conflicts of interest that were kind of a minefield to walk through in retrospect. So, putting up my own shingle in '09 in leaving, was a challenge to do. But in retrospect,
time to start a business.
Yeah, I got married in 2009, started my own business in 2009, and in retrospect, those were all fabulous moves. But those are the big reasons why I wanted to found a firm that I can truly look a client in the eye and say, listen, I am worried about the value and performance of your account for a certain list of objectives, goals, and risk tolerances, and you're not going to see things in the portfolio that I'm getting paid a higher compensation on, and that's the reason I'm putting it in there. Right? And I know the industry has evolved a lot over the past decade and a half, but I still see aspects of this around the industry, but it is getting better. It is getting better.
Yeah, and I think that's a kind of a great segue into how we manage money, right? So,
yes.
Just briefly before I get to that, because I think some listeners might want to know how we got hooked up together.
That's a good story. Why don't you share that?
Yeah, it's one of my favorites that I tell all the time, and I really enjoy it. But so going into my senior year at the University of Dayton, so I'm originally from upstate New York, so I was in Dayton for school.
Yep.
I worked at Charles Schwab down in Phoenix, Arizona, in their RIA services internship. So this was my summer going into my senior year. Came back to Dayton for the fall semester of my senior year. I was not taking a lot of classes at the time because I kind of front loaded most of my credits. So I really was taking I think 3 classes that semester, and one of them was like a joke class, right? So it was really 2 classes.
I'm not surprised by this. Jenna,
Yeah.
Are you surprised by this? She's nodding her head. Of course not. We're not surprised by this.
So anyways, so University of Dayton has a student-run investment fund where the university pieces off a little bit of the endowment, or at least at the time, it was a little bit of the endowment that has since grown since I left, to where the students are making all of the financial decisions and investment decisions. What gets bought, what gets sold.
Correct.
So the advisor or the person that oversaw that program at UD was a guy by the name of Mike Cobflesh, who ran a small growth fund out of Dayton at the time.
Correct. Small, I think at the time was like $5 billion. By the way.
Right.
It's all relative in the institutions, right?
Relatively speaking, and they later sold to a Canadian company, I think. But
correct.
So anyway, I was in the Davis Center one day, and Mike was there, and I just kind of struck up a conversation with him, and I was like, listen, I'm not really taking like a pretty heavy class load here, so I need some things to fill my time, and I'd like to get some more work experience. Do you know of anyone in the area that could use an intern? And I'll never forget this. He just looked me straight in the face and immediately was like, I know just the guy, and he happens to owe me a favor. So I was like, great. So obviously that ended up being Matt Jessup. So I came and interviewed, and it was a really good fit. So interned here my whole senior year, and then came on full time after that. And fast forward to today, we've grown the firm substantially, I think, together, and now formal business partners. So it was kind of just the right time, right place type of thing,
and it worked out perfect.
And it worked out. So again, like I said, fast forward to today, I'm the firm's chief investment officer, responsible for making all of the investment decisions with respect to our client portfolios.
Yes.
Head up the investment committee that consists of yourself, our research and trading team, and our other client-facing advisors. Kind of going back to what you said, a lot of advisors in our industry, when they say they, quote, manage your money, they're really subbing that out to a third party.
This is a key point here.
And I'm not saying that that's right or wrong. I'm just saying that most of the time that is what they're doing, right? So
they're not actually managing it day to day.
They're utilizing mutual funds. They're utilizing separately managed accounts, so on and so forth. Here, we do things a little differently in that we are, for the most part, picking individual stocks, individual bonds, and liquid corporate bond ETFs for our client portfolios. And why do we do that? Number one, we feel like we can manage risk a little bit better.
Correct.
Number two, we're not like everybody else. And number three, there is no conflict of interest when it comes to what goes in or out of a client portfolio. Because if we're buying 100 shares of Microsoft or 100 shares of Boeing or 100 shares of T-Mobile, we're getting paid no more or no less. We are making that decision because we believe it's in the client's best interest.
Yes.
And I know we're going to talk about fees here in a little bit, so I won't put the cart before the horse. But at the end of the day, we have a vested interest by the way we manage money of growing and protecting our client accounts. And that's, at the end of the day, how we make our money.
And what's really neat is as we make these trades, depending upon the risk level in client accounts, when we are either initiating a position, trimming or adding or selling, everyone across the client book is getting the same price and the same execution average, right? And that's kind of unique. You want to go any deeper on that topic?
Yeah, we have, compliance checks on that every single month. Nick in our office, director of trading, has a SOP, standard operating process, that every month we check to make sure that those execution prices are the same for clients.
Yes.
So that there isn't any favoritism amongst the client base.
So in a quick summary, the price that we get for XYZ security is the same in my personal 401k account that it is for any of our clients.
Right.
Right?
Right. So I guess hopping forward a little bit, since we just touched on fees, can you talk about how we make money as a firm?
Absolutely. So we charge an assets under management fee schedule. The fee schedule has what we call breakpoints, where the fee automatically drops for the entire balance once the household value reaches a specific figure. So we have a fee for assets that are $1 million to $2 million, 2 to 3, 3 to 5, and et cetera. The fee gets lower the more assets under management that we handle for a household. Going back to what you said of why we have a minimum, the importance for us is not necessarily a household coming in the door that has $2 million and a household that comes in the door that has 3. We have to worry about the number of households that is being managed and spread across the 5 client-facing wealth advisors, which is why we have to be selective to a certain extent, and the way to kind of control that bottleneck so we protect the client experience is by having a minimum.
Right.
It's by having a minimum.
Yeah.
Let's talk about the planning process, Mark.
Sure.
So this is an area of the practice that we really have bulked up over the past decade, and you've taken a lot of initiative between our partnership to really bulk this up. And so the reason I'm saying it in this fashion is the roots of the firm originally is in what I would call the portfolio or asset management side of our business. So as you were kind of talking about, security selection, and us actually getting our hands in the soil, right? We are getting our hands dirty here. That is, the roots of the firm. But we understood that as our firm grew, we needed to provide top-notch planning advice to our client base. So if you fast forward to today, we have 2 CFPs on staff, certified financial planners, Aaron Kramer and Taylor Ledbetter. Most of our regular podcast listeners are used to hearing from both of them from time to time. Taylor runs a popular blog, Tailored Finance, on the Jessup Wealth Management website, where she inputs and updates on a monthly basis a lot of real-time topics, and she's become kind of a fan favorite on the podcast. But when you take a deeper look at the planning process, I'm going to run through just some of the bigger topics that when someone's reaching out to us, that besides, I'm looking for a good fiduciary money manager to handle my assets, what are the other things they're looking for? They're looking for things like, when can I retire for the lifestyle that I'm seeking? I need some feelings that I'm not going to run out of money when I'm in retirement. I need help with estate planning. Do I have things set up the way they should to take care of the next generation? So first of all is that kind of comprehensive planning standpoint, Mark, where we are taking kind of a 360 approach to the client's entire financial life. And then we start breaking down what I would call some subcategories. Depending upon the complexity of the prospective client, we might not tackle everything at once. We might develop upwards of a couple-year game plan, tackle some low-hanging fruit initially, and then some of the more challenging, complex topics, we would set up some benchmark or goals over a period of time. So what are those things? Again, retirement planning, tax strategy. It could be things like generational and charitable planning. We have the expertise, the certifications, and the software, and then the proper wealth advisor to client ratio to deliver on that, what the client's expecting. Your thoughts and comments.
Yeah, it's a pretty cool thing that I think that we've built over the past couple of years, and now we have experts in the firm that pretty much all they do is this stuff, right? So one of the things that we can't do, that I'll say up front that we get questions about, is draft estate planning documents. So we're not lawyers. We can't do that. We can provide guidance and advice on that, and we have some really good connections that we've used in the past if people don't have an estate planning attorney. But
correct.
Unfortunately, it's just one of those situations that we have to have our law degree to be able to do that, and we don't have that here yet. It could be something in the future where we figure out something where
we hire a staff member that has licensed to do that.
Right. So,
but I will throw out there, we are happy to work with your existing estate planner or attorney on the estate planning side of it. And as you mentioned, if you don't have a trusted advisor in that space of life, we're happy to provide some referrals on that topic.
Right. Let's talk a little bit about ongoing education and communication, Matt, because I think, from the feedback that we've heard from newer clients that we've gathered over the past couple of years, I think the biggest thing that makes someone want to look for an advisor or switch to a new advisor is like a lack of communication, right?
Yep. And that lack of communication bleeds to, does this wealth management practice understand me, my goals and objectives, things that are happening in my life? And it just kind of bleeds from there, right?
Right. So you talked already about Taylor in our office, and she writes a monthly blog that kind of takes that deeper dive into personal financial planning topics.
Correct.
Retirement strategies, behavioral finance, your day-to-day money decisions, really designed to just help people feel more confident and educated about their finances, right?
Yes.
Obviously, number two, this podcast that we do from week to week. So if you are a new listener or a prospective client, Matt and I do a weekly podcast that just gives our quick 20 to 40 minute thoughts on the markets and where we stand. Maybe talk about some things that are set to go through Congress that are going to have big financial impacts on our clients.
Correct.
Talk about financial planning topics. Like you mentioned, Taylor comes on and does a really good job with that. Aaron in our office comes in and talks about some high level planning topics that could make sense as well. But really this podcast was birthed as a way to efficiently communicate financial education to people, because me and you felt like there wasn't a great outlet for that. Because
in plain English,
because you could turn on CNBC or MSNBC and they're talking about the markets, and it's a bunch of financial jargon that's hard to understand sometimes.
And we do it from time to time ourselves. We're susceptible to it, but we try to be very conscientious about that aspect and say, listen, you're seeing these types of headlines. This is why the market's paying attention. And this is our interpretation of how the market will digest this.
Yeah, and it's something that, it's not just for our clients. Anyone can listen to it. It's free.
Sure.
And I think it was our way of saying, hey, me and you talk about this stuff every single week. Why don't we just turn the microphone on and see what happens and put it out there, right?
That's exactly how it started.
So that's how this started. And it's nice because our clients can actively listen every week or every other week if they don't want to listen every week. It's pretty short. We try to keep it, like I said, between 20 and 40 minutes-ish, 40 minutes on the high end.
Yep. Sometimes I get in a soapbox.
But it's nice because clients don't have to call in every time something happens in the market and is like, hey, what's your thoughts on this? What should we be doing? Because we're actively talking about this stuff every single week on the podcast.
Well said. And it's the fact that I think there's a lot of firms that produce a podcast, but the frequency might be once a quarter, once a month. And I think that we keep the content so fresh and consistent. And we have different staff members who will guest sit on the podcast, not just you and I. And that's, I think, a very, very unique. I mean, we're past 300 plus episodes, right? It's amazing what we've been able to achieve the last 5+ years on the podcast. Why don't you tell listeners and viewers what you produce for clients on a monthly basis?
Yeah, so on a monthly basis, I write a market update newsletter that Jenna throws in with our monthly communication to clients. So it's not a situation where I'm copying and pasting from a research service that we pay for and just saying I wrote it.
Which is very common in our industry.
It is. So, if you're associated with a broker dealer, they put out monthly or quarterly market commentary that you could literally copy and paste into a newsletter or into an email to clients and sign it as if it was your own. Right?
Correct.
Now, what I do is I highlight a lot of people in our industry who I think's research is phenomenal, but we're not getting paid to highlight their stuff, right? We are sharing things on the podcast. I'm sharing things in the newsletter that I think clients should be aware of.
Yes,
and there is no financial compensation for that. And I think those people need to be highlighted more by people like us, because I think there's a lot of diamonds in the rough that maybe people haven't heard of before. Again, if they're just going to those legacy financial media outlets like a CNBC or an MSNBC, right?
You said it perfectly. I know we're also active on a lot of social media platforms. I'll speak for myself. I am most active on X, the old Twitter, right? Mm-hmm. And I post a lot of research content or topics that catch my eye. And I think are very intriguing, and they tend to make their way on the podcast in short order when I post those things. But we also, the firm is active on Facebook and LinkedIn and Instagram, and I think we do a really good job with client communication. And I'll take it one step further. I feel like we're really accessible to our clients. Share what's our rule if a client calls in and you happen to be in the middle of a trading meeting with Nick and Ben. What's the firm's rule on returning calls?
That it's the calls returned before the end of the business day, and if it's not me, then it's Matt or it's Aaron or it's Taylor. We never want it to be a situation where a client has a burning question and they can't get a hold of someone. So even if it's not the client's direct advisor or direct relationship manager, they're more likely than not going to get a call back before the end of the day.
And I know that for some people who are listening, are like, well, that's table stakes. That's the way it should be, right? You would be surprised how many prospective clients have said things to me such as, the reason I'm moving my account is I've called my advisor twice. He or she has never called me back. Mm-hmm. And that is just mind-blowing to me, right?
Yeah, it's a weird way of doing business.
I think that's a good segue to kind of talk about the entire team. Right? Because I think there's a lot of firms out there kind of talking about this JWM advantage, Jessup Wealth Management advantage. One of the things our clients love most is they get the entire team. So from the first conversation, we have dedicated planners, advisors, and support staff that will know your specific situation and will genuinely care about you and your family. So when I am having a discussion with a prospective client, I'm not only dissecting in that initial conversation everything from their goals and objectives, their sophistication with finances, so I can talk properly on their level. I'm also trying to get a sense of their value system, their personality, because with 5 client-facing advisors, I feel like I can really dial in things from the level of experience of that wealth advisor, the areas that they focus on more than others. And so when I am kind of matchmaking within the firm, it allows me to really create a relationship for that client that's going to be meaningful, and they're going to connect on just more than a level of, hey, here's how your investment account is doing.
Yeah.
Anything you want to add to that?
No, it's a very, I don't want to say laid back, but, I think the financial industry has had this stigma that, people are, advisors are very stuck up and they know more than all of their clients, and their clients should just do what they're told by their advisor, when they're wearing their 3-piece suit, and that's just not the type of stuffy environment that we have here.
That's a good point, Mark.
I think you did a really good job when you started the firm to have more of a casual environment. When I say casual, a golf shirt, a pullover or a sweater and slacks or nice jeans.
Sure.
Just to where,
it's approachable.
We're humanized as well. It's like, someone comes in, we're not just like a robot, right? It's like, hey, we're a person too with, kids and a family. And like you said, we talk a lot more than just about how your portfolio is doing, right? It's, it's a situation where we truly feel like that our clients are our family. And, whenever I have a client meeting, they want to see pictures of my daughter. They want updates on my wife, yada, yada, yada. And I do truly feel like it's like that for the majority of our client base. So it's not just like a transactional relationship.
Not at all.
That makes sense.
Not at all. I'll give you an example from yesterday. I was in my office and Nicole mentioned to me, she's my executive assistant, that, hey, XYZ person is on the phone for you. I picked up the phone and I said, her first name was Andrea. I said, Andrea, I am so excited to hear your name and talk to you right now. And I genuinely meant it. It was great because we usually proactively reach out to a lot of clients. So it's funny, we don't get a lot of incoming calls at times, but when we do, I embrace those moments because it's beyond the normal, this person is a client, right? We genuinely care about these individuals and we're creating relationships with them.
Yeah. And I think that's, one of the other things that, we talked about the team a little bit, but me and you from the very beginning made the conscious decision to hire our staff for them as a person.
Big point
rather
here.
than their experience.
Yes, sir.
And, the trade-off with that obviously is, especially if you're hiring someone that doesn't have a lot of industry experience, you got to train them up and train them the way that we do things and teach them the industry and that type of thing.
Yep.
But our staff is tenured enough now to where they have grown substantially in their roles that decision of hiring them for the person they are has really paid off, because now
we're getting the dividend checks.
They can do everything that someone else who has a lot of industry experience can do, right? And, we always wanted it to be a situation where clients felt comfortable with our staff felt comfortable with clients, and me and you take office culture very seriously and think it's one of the many keys to success in this industry and just in business in general. So we did spend a lot of time to make sure we were picking people that fit the JWM culture.
I'll take it one step further. I think when a prospective client comes through the door and we're showing them around the office, we're introducing them to staff, I think the culture is palpable for these prospective clients. And you and I say it directly to our staff, and I'll say it on this podcast. We want to create an environment for our team that they can't replicate elsewhere at another firm. Everything from compensation to a work-life balance, and I think we do a really good job of that. And I think it's really felt when clients are interacting with our staff. So one more point on this topic. When someone starts with the firm, we will assign a dedicated wealth advisor to that relationship. It could be me, it could be Aaron, it could be Jack, it could be Taylor. Mark, you still have some relationships, but given your important day-to-day responsibilities on the investment side of the equation, we don't allow a Mark to handle any new relationships out of protection of our investment strategy. And when we are assigning that dedicated advisor to that prospective relationship, they are meeting 10 plus staff members when they're onboarding. The beautiful thing is all they got to know is Taylor will be their single conduit to the entire resources at the firm. They're going to understand that in my example of Taylor, she doesn't do everything for that client relationship. She is utilizing the resources and knowledge and experience of a lot of team members, but it's typically being delivered via Taylor. However, when we do have certain, say, financial planning tasks, it's a great example to throw out there. Let's say Aaron Kramer is the lead advisor. He might tee up Taylor independently to work with that client on some, say, year-end tax planning or analysis on retirement planning. The client has to understand that it's not just going to be a single individual. We do truly work as a team, and there'll be times they do interact with others. They're not getting shoved off to somebody else. It's just kind of how we set up, because we want experts in those areas delivering that advice. Your thoughts and comments?
Yeah, no, it's great. No, another example of that is, even though a client might not be directly interacting with me, if a client needs something from Aaron or for Taylor, or they want, an investment recommendation on their 401k, a lot of times they'll shoot that over to me and say, hey, can you take a look at this? I'll give my recommendation, shoot it back to them. And it's coming from Aaron or Taylor, but I still have my fingers on it a little bit. And I think that's something that I think is very different about here, is that you're a client of Jessup Wealth Management. You're not just a client of Aaron or just a client of Matt or a client of Mark. And
all of our staff are W-2.
Yeah. And a lot of independent wealth management companies sometimes are set up and say that they're business partners. Take me and you, for example. But at the end of the day, most of those people have their own clients. So it would be a situation where Matt has his client base, Mark has his client base. They share office space expenses, but
well said.
Mark has his assistant, Matt has his assistant, and there's no commingling or sharing of those resources.
Well said.
And we made, again, the conscious decision that we were just going to throw everything into a pot. We share expenses, we share staff, we share clients.
We have no other conflicts of interest in our partnership.
Right. So for our CSA team, for example, what's common in the industry is, you have a administrative support staff that's assigned to a certain advisor, right?
Correct.
And, that could create some conflict, because if Sarah, for example, is Mark's main CSA, but she's helping Matt with something for one of his clients, but Matt's not paying her salary, then
Mark
gets
be
mad.
Like, what's going on here?
Right. So to eliminate all of that, whenever I know you're working with Sarah, Megan, or Jenna, or I'm working with Nicole, if Nicole's helping me with something,
sure,
even though she's really not my assistant, it's like, it's good for the firm. Right.
That's right.
So everything is shared, and you do get JWM as your financial go-to person as a whole entity, and you're not just getting one person like your direct relationship manager.
Yeah, I'll be direct here. I feel like I don't talk about that enough with prospective clients, the fact that we are, fiduciaries on the investment side, because that's typically one of the first questions I get, right? Because a lot of people are doing some internet searches, and they're doing searches for what are some of the questions that I should be asking as I'm interviewing prospective wealth management practices. And what do you think the first question I get every single time is? Are you a fiduciary?
Yeah.
Right? So then I not only explain that, yes, we are, I go in depth and I go deeper as to what that means in our world. But even think about how the practice is set up. Everyone's a W-2 staff member except for you and me. So in our partnership is pure, right? And that's not common. You and I, we do talk to a lot of other firms around the nation, and this is a very unique setup. I could make that argument. Let's kind of transition and talk about how people become clients. Okay, I think this will be our last topic for this specific podcast. So when I am doing that initial 15-minute conversation, I usually talk for the first, and I get permission. I talk for about 2 to 3 minutes, because by the time someone reaches out, they've typically have done some due diligence on us. So I'll cover some highlights, and then I will sit there and say, I want to hear you speak. What made you reach out? What's important right now in life? And I'm going to listen. And when they usually will tell me, it's typically surrounding either a life event, or they're typically unhappy where their primary assets are managed. After that initial conversation, I will make sure that they received all of our regulatory documents. They're sent before that call. And that's things like our SEC registration documents that disclose everything about the practice. In fancy term, we call them ADVs.
Yeah, we're a real investment manager, and we're a real financial planning firm.
Correct. Right. So we got we live in a very highly regulated environment / industry. So I'll make sure that those documents were received, and then I usually say, listen, we are not going to chase you. We have had our initial call. I will be honest and transparent if I feel that they're a good fit for our practice, and why either way. And at that point, I say, listen, I'd love to get together. If you want to meet face to face, have a video conference if they're not in the Dayton area. And at that point, we can start diving into more of the specifics. I have examples where people are comfortable at that point. Maybe they were referred by a friend or family member, where after the initial conversation, it's like, listen, I do want you to look at everything. What do I need to do to have a conversation that's detailed about me? I will then sit there and explain, I'm going to email you a data finder that you're going to complete for me. You're going to submit some things back. And then we're going to have a meeting where I'm going to analyze where your investments are right now, how they're performing, the fees that are associated that you see and don't see. That's a completely different podcast.
Right.
And we will also look at kind of the financial planning side of the equation. And then after that first meeting where we're really diving in and showing them details, again, ball's in their court. We are very low pressure. We have a very established practice. At the end of the day, and this is going to sound nuts to say it, but I want to say it, if we didn't get another single client, we would be ultra successful, in my opinion. We're knocking on the door of $500 million of assets. We're over $480 million of assets held at this firm, 425 households. And yeah, do I want to grow? Yeah, of course I want to grow this firm. But I'm not going to do it at the detriment of our existing client base. So again, at that point, if they would like to proceed forward with our firm, we list out, here are the next steps that you're going to experience. We are very blessed to have an experienced bench on our client service associates, Sarah and Megan. They would handle the opening of client accounts, money movement, rollovers. There's a lot of things that the client service associates handle. And then we're very clear on how we would transition the portfolio management from where the assets are today to when they come in-house. So I feel like we have a low pressure, high information engagement at the beginning with a prospective client that puts them in a position to be like, hey, okay, it's very clear to me. Do I want to work with this firm or do I not? Sometimes clients will call up and say, well, I'm going to interview another couple firms. Do that, because these are big life decisions. I stand by the value proposition that we bring to the table is very, very difficult to replicate, especially in Southwest Ohio. So that's the thoughts I wanted to throw there.
Yeah, it's definitely been an unbelievable, I think, journey for the firm since at least I've joined up with you. I think when I came to you in 2015, there were 4 of us, and now we're up to 12 of us, I believe.
Yeah,
now,
with a 13 sometimes with interns, right?
Right, exactly. So, I hope that this podcast was helpful for people. I know we get the question a lot of times, like, how does it work? How does Jessup Wealth Management work?
Exactly. And just like we started the podcast to share our thoughts and views on the market and share real-time, up-to-date financial planning topics, we thought to ourselves, we got to have a podcast and talk about exactly how we can help prospective clients.
Yeah, for sure. So if you're a prospective client and this is your first podcast episode that you're listening to, tune in to the Independent Advisors podcast and listen to a couple other weekly episodes where we are actually getting into the nitty gritty and discussing what's going on in the markets. If you feel like you'd be a good fit, obviously Matt went through that process.
Go to our website
on how you can reach out to us. But yeah, stop at jessupwealthmanagement.com and click that schedule initial call button. Thanks to everybody for listening, and we will be back with our regularly scheduled podcast for next week, talking about the markets.
See you next week, everyone.
Thank you for listening to the Independent Advisors Podcast. If you're interested in hearing more, hit the subscribe button so you can be notified every time a new episode gets released. Feel free to share with friends, family, and follow us on Twitter at Jessup Wealth, Facebook, and LinkedIn. Mark and Matt will continue to share beneficial information on these social media sites. Also, check out the podcast tab on their website. That's www.jessupwealthmanagement.com. There you'll find links to every episode of The Independent Advisors. Have questions or topics you want to discuss on the show? Message us on Twitter, LinkedIn, or send an email with the words questions and topics in the subject line to inquiries@jessupwealthmanagement.com. We'll talk about it right here on the podcast. Certain sections of this commentary may contain forward-looking statements based on reasonable expectations, estimates, projections, and assumptions. Forward-looking statements are not guarantees of future performance and involve certain risks and uncertainties which are difficult to predict. All indices are unmanaged and are not available for direct investment by the public. Past performance is not indicative of future results. This podcast is provided for general informational purposes only and does not constitute either tax, legal, or financial advice. Although we do go to great lengths to make sure our information is accurate and useful, we recommend you consult a tax preparer, professional tax advisor, financial advisor, or lawyer regarding your specific circumstances. Investing involves risk, including the loss of principal. No strategy can guarantee any objective or goal will be achieved.